Alrighty, I'm here today with Domingo Valadez, who is an entrepreneur who has started an investor relations software. I personally use it. Gotta say, it's pretty awesome. So, Domingo, really respect what you're doing and appreciate you taking the time to join me here today.
Of course. Thanks so much for having me on, Jeff. Really excited.
Nice. So, why don't you just kind of give us a quick intro to how, what your background is, how this led you to real estate, and how, you led specifically to your software?
Yeah, absolutely. So I feel like I've been living and breathing real estate since I was a kid. My parents are dentists, but outside of work, like they've been investing in real estate since I was really young. A lot of times after school on the weekends, I'd be going to open houses, checking out properties, and I remember so vividly like just being at these open houses with them, most of the time against my will. Then ended up going to Penn, studied finance and real estate there. Was at Google for 5 years and did product strategy while I was there, but always still had the entrepreneurial bug. Wanted to get into real estate in some capacity. So ended up leaving Google around 3 years ago to start Homebase. And we actually started off as a crowdfunding platform. Have you ever seen like any platform that allows a lot of folks to come in, invest in property for as little as $100? That was our goal. The thesis was we think real estate's getting way too expensive. How do we make it affordable for people to still get, a piece of the pie and get that appreciation? And so we let people invest with as little as $100. Successfully acquired and syndicated 2 different deals in that capacity. Went viral on social media a few times. Ended up building an investor base of about 3,500 plus accredited and non-accredited investors in under a year. And from that experience, just learned a lot about syndication from like the fundraising side, the K1s, the compliance, like truly the end to end. And we built a lot of software for ourselves to handle it. So last year, like last summer, we started getting reached out to by different operators and sponsors, just being like, hey, like we've seen you guys, like we see this crowdfunding platform. Can we use your platform for our own deals? And so we ended up getting enough interest that we actually pivoted the business. And we went from a crowdfunding platform to truly a software business, an investor management system to support different operators and sponsors, manage their entire back office from fundraising to investor management to then, deal management post-close. So yeah, that's a bit of my story and how I got into this space. But it's been a ton of fun. And I see a long career in real estate for myself.
Nice. Well, I got some real estate questions based on what you asked, but I have to ask, both of your parents were dentists. Were you ever allowed to have candy as a kid?
I was. They were not super diligent on it. They would, of course, check my teeth. I got blessed in that I have strong teeth, so I never got any cavities as a kid.
Nice. That's awesome. So, in terms of you pivoted from a crowdfunding, I think the crowdfunding model is awesome. I think it's going to become more popular as more people want to get into real estate. Not only is the barrier to entry for a single deal, sometimes the barrier to entry to be a passive investor is like 50,000. A lot of people don't have that to put in one thing. What was the main reason for the pivot from that to kind of like being a joint venture syndication type investor platform?
Yeah. So what makes it challenging for, smaller checks to get into these crowdfunded deals is securities regulation, like Reg D, 506B or C. Those are the most common used. A 506B limits you to 35 non-accredited investors. A 506C, it's only accredited. And so you really have to go through like a Reg A or like a crowdfunding type regulation offering. And those are just incredibly expensive to run. So it really only works if you reach a certain size of company. We were early in our journey. We were experimenting with these. And so we did sell those 2 different properties. We were getting a lot of momentum. But then interest rates went up dramatically in a very, very short period of time. And this business is a bit more capital intensive because you have to manage these deals. Like we were the sponsors managing them ourselves. So we got really good at operating and learned a lot about that business as well. And, in tandem, we started getting demand from people that were much better at us than this. They've been in the space for a long time, just being like, hey, like you guys have a system. Can we use it for ourselves? Because back office sucks. And so that's really what led to the pivot. A lot of customer discovery calls with different sponsors in the space, realizing that like syndication is something people have been doing for like many, many years in the US. It's like a big business. And so that led to that pivot. However, I still feel very passionate about giving folks the ability of investing. I would love to launch a private REIT and then have that REIT invest with some of our top syndicators on Homebase. And I think that'll be hopefully a competitive advantage for our company where sponsors can get liquidity for their investors earlier. And then we also give the opportunity to, like, we still have an investor base we keep relatively warm with our podcast, And so giving some of those people the opportunity to invest in private deals at a much, lower check size.
Interesting. So you're a private REIT that's basically, you lost me on that, but it sounds really interesting. Can you elaborate more on that?
Yeah, so that's going to be like a longer term vision for us of the goal of launching that. We probably wouldn't even do that until we get to like $1 billion plus of assets on Homebase. Right now, we have about 85 million of assets, so over a 10x, increase. However, I think, very doable. And I think the nice part is like we get to build so many different relationships with sponsors. We get to see people's track records, like truly get to understand folks because we get to work with them closely. So we kind of not going to promise that we're going to be vetting everything, but we can theoretically vet like who are bad actors versus good actors, and then give people the opportunity to invest in this REIT that is an investor with like 10, 20, 30 different syndicators.
So when people keep asking you, hey, remind me again how I send out notifications for a capital call, that's going to be like, hey, they've asked us about that like 10 times. Maybe they're not the people we want to invest our REIT in. Something like that. Kind of, okay, nice. It's always interesting to me how many businesses are profitable in of themselves, but then their real value is kind of like a tangent to that. It's something that like I know a guy who manages a lot of parks, doesn't make much money, but he sells them. Whenever those people are done with owning them, that's where he makes his money. And so I'm sure Homebase itself is that's just kind of like an extra icing on the cake layer to your business. But that's cool that you're already thinking that far ahead. That shows the entrepreneurial brain in you. That's awesome.
Yeah, I think it goes back to the mission of just we wanted to give more people the ability to invest in real estate. I think a lot of times syndications, the minimum sizes are like 25K, sometimes 100K. And so not everyone has that, can afford that. And so we know private deals are where a lot of good investments are made outside of like public markets. And so we want to give more people the opportunity to be able to access them.
Yeah, that's awesome. That's a great mission. And it's right. I think obviously I wouldn't be in real estate if I didn't think it was a great investment. But you're right. Not only is it 25,000, people have to have like 10 times that to be comfortable putting that in one deal, because you don't want to be, you can put in the S&P 500 and having tons of stuff. Well, real estate, if the minimum's 25 for one property, that could be kind of tricky. So awesome mission you have.
No, thank you. I appreciate it. We still need to bring this to life. And I think we still need to grow 10x before we'd even do something like that. But just sharing with you a bit of the vision and how I think we'll go full circle to the roots of when we started off as a crowdfunding platform.
That's awesome, man. That's cool. So when you got into this, how hard was it to kind of start with no customers and get that very first person to be like, hey, well, we want to use you? Now, obviously, you kind of have been your own customer in a way. So what was that transition from, hey, this is good enough for us, is like, hey, we have to package this for somebody else to be good with this?
Yeah. So I like to think that we felt like second-time founders at this point, just because we had already built the crowdfunding platform. We probably built that for 8 months before we actually start talking to consumers and like the things you should not do, all the mistakes you make as a first-time founder. So when we made the pivot, we actually, before we built anything, we created mock-ups on Figma, and we basically said like, okay, like here's what this flow would look like. We started just reaching out to a lot of different sponsors and operators just to understand like, okay, if we built this, would you use it? And then we also wanted to hear, okay, is anyone happy with existing solutions? Like from what's in the market today, are you happy with that? If yes, why? If not, why? And then really try to diagnose, okay, why is this an issue? And like, what are still the pain points? And I won't say that we like perfectly resolved everything. Like we consistently iterated. We're a small team of 3. So it's like we can only do so much, but we're trying to move quickly based on a lot of feedback we've gotten. But getting that very first customer was basically just saying like, if we built this, will you use it? With a commitment of like, we're going to give you a very discounted rate. However, like this is going to be very iterative and we're going to be building this. So I would say like we were able to get our first 3 customers actually quite easily with that mentality. I'd say pushing past that was actually a bit more challenging for us because at that point now people wanted to see more of like, okay, like this is too bare bones for us to feel comfortable working with you. And so it probably wasn't really until this January where we really started like really jumping up in number of customers that we have. We went from like literally 6 to now 20 over like a 4-month period of time.
Nice. So you keep doubling it like that, the 10x you talked about is not that far off. That's the crazy thing about it. Once you get that momentum going, it just kind of starts taking off. So you mentioned something really interesting I think a lot of people need to pay attention to. You spent 8 months just kind of building it before you talk to people. So a lot of people, I'm guilty of it myself, and I think most entrepreneurs are. We get this idea, especially engineering type people. They get this idea of a product and they just perfect it, and they never talk to anybody else about it. And it's this really cool thing, but nobody actually needs it for some fundamental reason. Like maybe it already exists. Maybe there's a way cheaper option that is simpler, but that's fine because it's so much cheaper. So what about that process of you kind of first talking to people about it was the most eye-opening?
Yeah, I'd say like the second time around when we were building like our software solution, and then, first even thinking like, should we even come into this market? Like, is it too competitive? Do we think there's enough opportunity here? I think from the conversations, like it's quite a competitive space, but no one was really that happy with their solution. I'd say like no one ever was like, I love this product and like I will not switch no matter what. It was always like, if you offer me a better price, or like if you can do XYZ thing, like I'll move, like I'm not married to this. Even though theoretically there's a lot of pain with migrating. You're like bringing all these people over, all your investors. Like people in theory hate it, but they do it time and time again because no one really loves their solution that much. So I'd say like going back to your first question of talking to customers, like that to us was really eye-opening. And if we had been building Homebase just for ourselves and not talking to customers, we probably would not have realized that. We built a lot of stuff specifically for a crowdfunding platform. We were our own customer. And so we were trying to get like certain P flows like to be very smooth. But it was through all these conversations that we realized, okay, like what are truly the core features everyone's using? What is all these additional features that are theoretically important, but no one's actually using? And I'll give you like an example that's like relevant for us. Like for example, everyone says they want a CRM in their investor portal, but very few people actually use it. Everyone always has their own. And so a lot of other players spend all this time building it, but in practice, no one's really using it. Everyone wants to use their own and then just see if they can integrate. So like that was one learning and insight we had, but super applicable for engineers in general. Like don't just build based on like what you think consumers want. Actually talk to people, get their feedback, build like your minimum viable product. And of course, you're going to get a lot of feedback and iterate. I think the big realization we had was you have to feel comfortable with a product and market that you're not that you're like, oh, I wish this was better. Like, I'm not that happy with this. But you're doing that on purpose because you're get good feedback and then you iterate. Where Homebase is today versus where Homebase was 8 months ago, like so different. It's crazy. I don't know if I personally would have bought 8 months ago. I'm so happy with the customers that trusted us to like build what we were going to build for them. But yeah, that's how I've kind of iterated just as a founder building in this space.
That's smart, and that's why you're growing. A lot of people take the approach to, they're going to get everything perfect. And this is true of what you did in a tech startup. It's also true of people trying to syndicate and go out and, and it doesn't have to be perfect, right? It just has to be viable. Like you said, the minimum viable product. And you get one and you get better and you get better and you get better. And you won't have 20 years of experience perfecting things in 2 months. It just doesn't happen. So you have to take the approach you did. And I bet it's awesome to kind of see it go from 6 to 20 because that's more than just, hey, we've got 20 customers. It's like, hey, we've actually built something that people are flocking to. That's when it starts to really probably fire up to work even harder at it.
It does. No, it introduces a whole new set of problems where now you're like managing different onboarding cycles. You're having like one-off conversations with customer support, but it's been incredibly, I think, fulfilling personally, where like a lot of folks are using your product and like relying on you. You're building something that hopefully has value when if your product's down or breaks, people are pretty angry because you're like, you're hurting their business, like their core business. And so now, like, okay, I have something that is truly helping someone, when everything works perfectly.
Yeah, it's an important part of it. So do you want to explain kind of more of what exactly Homebase does for people listening so they have a better idea of like what exactly it does?
Yeah, absolutely. So Homebase is very much a platform specifically built for sponsors and operators to help streamline their fundraising process. So we provide sponsors with a deal room they can very easily share with prospective investors, collect capital, get all the different documents they need signed, all in one flow. And then post-investment, Homebase makes it easy for sponsors to give everyone investor updates, send out monthly or quarterly distributions, as well as just keep, folks interested and updated with investor communications on the platform. So that's where we're at today. I think eventually we'd like to become more of like a holistic operating system for commercial real estate. So at a certain point, we're going to be tying in asset management to it as well. But right now, very much focused on the investor communication as well as fundraising side.
Yeah, you got to crawl before you can walk. You have to get really good at the basics, and then once the basics are solid, then that's when it gets fun, and you can start adding in the more creative, more complex components. But I mean, there's so many softwares and stuff I've used over the years where just the basic stuff is such a pain in the butt. Where it's like it has all these capabilities, but I can't even get the basics figured out. I don't want to use this. So cool. How was it for you? You know, you've obviously got this idea. You've got a partner who shares the idea, so that probably made it easier. But what was the process of like leaving your full-time job and then going full on into this? Was it just an immediate, I'm stopping this and starting this, or was there some overlap?
I'd say probably before I quit, there was probably like a year-long period where I was like just testing out different ideas. But it's really hard to do that when you have like a full-time job that's quite demanding. I'd say for me, funny enough, my mom at some point, because I used to always tell her like, oh, I'm thinking about doing this, I'm going to quit next month or whatever. She was like, okay, stop telling me you're going to quit, just do it. Like, so, you've been telling me this for a year. Like, just do it or stop telling me.
Yeah.
And so then at that point I was like, okay, I'm going to quit in like next month. And then finally pulled the trigger. And then, you know, after you quit, you're like, oh, I should have done that way earlier. Why did it take so long? Like it's way less scary than I thought it was going to be. Of course, I also had the privilege that I had like over a year's worth of savings. I would not do this if I had like 3 months of runway, for example. And then I'm like, okay, 3 months are up. I have to go back and get a job. Like you should be able to be secure for at least a year, if not 2 years or 18 months, because it takes a while to actually build something that gets traction. And for a lot of founders, it takes 2 years, 3 years before, you know, you get some level of traction. So that was kind of that process for me. And of course, in hindsight, I'm like, I should have done it earlier.
And people always think that, and it seems so much scarier than it really is. Like I've constantly noticed that from other people that just mesmerized that I'm a full-time real estate investor, because they just in their head they've made it so difficult, but it's not. Like if I mean I don't want to say it's easy, but that or starting your own business, once you start, you realize like all the stuff that was in your head about how good your job was or how stable it was, it's kind of just your company feeding you that to make sure that you stay with that. I mean, shoot, how often does Google lay off thousands of people at a time, you know? And then you don't have a plan. Now you're just screwed. So, you know, anybody listening who's thinking about starting that, it's not as scary as people make it seem. And at the end of the day, you can always get a job again. It's very often if you pass on a business idea and don't even at least try, it might not be, that idea might not be viable ever again, right? Maybe somebody else did it, you know, maybe the industry changed a little bit. Now you can't keep up. And with AI nowadays, businesses are getting so quick, and you can go from startup to really, really good product in less time than ever. So it's really important if people are kind of on the fence. What would you tell somebody who was on the fence and like they have a good job, they got a good idea, but they're just so scared of losing that income to pursue it?
Yeah, so first I'd say like entrepreneurship's not for everyone. I used to think it was, and I'd say like some people just have not. Yeah, some people just have different like goals in life, which is completely fine. Like I honestly sometimes wish I just stayed at Google and like I'd be happy with my life if I did that. I'd be much more comfortable. I'd have a nice salary. And then other folks just, you know, are like, no, I have to do my own thing. Like I have to pursue, you know, this specific passion that I have, and like I'm going to give it, you know, my 100% to do it. To those folks, I basically say like, don't give up and keep moving forward, and you're going to like get punched in the face a lot. It's about how you react to it. I'd say if you have a full-time job and, you know, you're thinking about should I leave or not, it's easier than ever, to your point, to just start something using AI to build it. You could use like Lovable. There's this whole thing now called vibe coding where you could literally build an entire product, test it out in market before you even quit your job. Much easier to try things out than it used to ever be. And like, you can even look at established industries, see what you think is like not doing well, build a very cheap solution using AI to build it, and then go to market and see if you can sell it. So that'd be my suggestion to folks.
Yeah, that's great. And you said something that's perfect. It's not for everybody. Entrepreneurship is not for everybody. A lot of people have good ideas. A lot of people are smart, but the idea of being an entrepreneur, the question I would always ask, would you be willing to work twice as much for half the work, but not answer to anybody? If people are like, I don't know about it, it's like, you probably don't have the stomach for it, because that's what it's going to be for a very long time. To me, my dislike of working for somebody like directly, and I probably got this like on steroids because I was enlisted in the military and like Like high school dropouts were like bossing me around. And so I very quickly got tired of it. But a lot of people, that's their main drive. It's not that they're totally unhappy. It's just that they don't, the people who really actually take the jump, they value that freedom of like, I don't care what happens to me as long as I'm responsible for it, if that makes sense. Is that kind of how you felt when it was time to pull the trigger?
Yeah, absolutely. I always knew I wanted to start something. It was just scary to not have like that financial stability. And now that I've been on the other side for about 3 years, I think I've perpetually had 6 to 9 months of runway. And so you have to be okay with the unknown. It's not going to be as secure as having a job. Although, yeah, to your point earlier, it's actually way less secure than you think having a job. Like now as a business owner, like we're talking about hiring someone very soon. If that person's not performing, like they'd be let go pretty quickly.
Yeah. Yeah.
And so, yeah, you actually have a lot more sway as a business owner because you get to see where all the income's coming from and you're ultimately making the decisions.
Yeah. Elon Musk said it really well, that it being the founder is like staring into the abyss and eating glass. It's like you just see, and I never understood that, but it's like you just see the worst parts of the company. Like I'm sure you might have in your head, like, we have to grow, or on this date in this month of this year, we're done. Like I know that date for my own business, and it's like, how is there a date? Like how is there still a date? My goal is just to get it to where there's no date. But that's everything. And some people just, they cannot stomach that. To me, I'd rather know and at least have something I can do about it than the assumption that this is forever. And I think you and I are both young enough to be from that generation where we saw people kind of buy into that. I'm going to work the same job for 30 years and then leave and I'll be set. And we saw a lot of businesses when things got tough in 2008 and whatnot just kind of leave those people high and dry. They get bailed out, pay themselves, and their employees, sorry, good luck. And I think that's why there's a lot of people trying to get into real estate, because there's that attractive aspect of no matter what, I own that, right? And it will continue to pay me. Maybe it goes down, maybe it goes up, but it will continue to pay me. Is that what kind of like drove you to get into real estate too? I know you had mentioned you had always known about it from your parents growing up.
Yeah, I think there's a level of just freedom you get from having passive income come in from a different source. And not even quote unquote passive, just like another source of income outside of your main job. Like knowing that if you got fired tomorrow, you at least still have something else providing you with an income stream. And in real estate, it's probably one of the easiest ways, not easy, but like one of the most known ways where you can look at other people's success and try to emulate it for yourself.
Yeah. And looking at it from a perspective of like, I don't need it to be all or nothing. I think too many people get into real estate. They say, I want 10 grand a month so I can live off of it. They get to like 500. They're like, that's too hard. I'm quitting. Well, it's like, well, that 500 is pretty good. You know, like maybe you can take more trips now. Maybe you can do this. And then you get to 1,000 and then 2,000. It doesn't happen overnight. And it, like each step along the way is a huge success. And I'm sure growing a business, you're the same way. You know, it's like, okay, we got another customer. That's a win. We've got to 20. That's a huge milestone. And then those milestones just get bigger and bigger, but easier and easier, which is, I think, where most people drop off. It gets really hard, and they just said, all right, I'm out. But that was right before things start to get easy again.
Oh, yeah. I'd say it's funny how things compound. Like, people overestimate what they can do in a year, but underestimate what they can do, like, in 10. Like that always, like, resonates with me. And I know that's, like, one of those quotes. The foreseeable future just feels like everything is so difficult, but then, you know, you get a good rhythm going, and then like that next $500 a month or that next customer, you know, becomes that much easier to get. To the point on real estate, like that first 500 is probably so hard. It's your very first deal. You're first getting into it. Like now you've established it. The next deal is going to be that much easier for you to get down, and like then add to that income stream coming in. Definitely resonate with that.
I've noticed that maybe this is just my perception, but there's a lot more like endurance athletes in real estate than other aspects. And I think it comes to that mindset of just taking what they can control right now. Like they're not thinking about, hey, I've got to run a marathon. I'm only on mile 2. They're more so just thinking, I can run another mile, so I'm just going to focus on that. And they do that enough times, they get to their end goal. Because real estate, I don't know the exact numbers, but I would have to imagine it's like one of the most stable and predictable businesses you could possibly have. It just takes forever. It takes a long, long time to notice real success. But your likelihood is so high. That's why the people you see who've done it for a long time, like I still have not met somebody who's been in real estate for 20 years and be like, I regret it. I've lost so much money. But like, I just haven't, right? I've met a lot of people who try in like a year, and in like that first 5-year period, they die out because they grow too fast, or they make the wrong decisions, or they try to make money quickly. And then, it's not built for that. It's meant to build money slow.
Yep. No,
completely. So you guys came into this. What were your first 2 assets that you raised money for on your platform originally?
Yeah, so those were both single-family residential properties. So very different to the type of customer we're supporting now that are all commercial. But very outside of the asset class, everything else was the same. It was still like a Reg D, single asset SPV that we were acquiring these under. We had like 45 investors per property. So it's like almost identical 101, except the check sizes were tiny. It's like $1,000. We had some anchor investors that put in like 20 to 30K or 50K per deal. And that allowed for, the $1,000, the $500 checks to come in also. But yeah, it was single family in McAllen, Texas, which is like the most southern tip of Texas, which is where I'm originally from.
Nice. Okay. So you went from Texas to New York?
Yeah.
Wow. That is a stark difference. Wow.
I went from one of the poorest cities in America to one of the most expensive, if not the most expensive city in America.
What would you say is the best part of each city?
I mean, I'd say McAllen was an incredible place to grow up. I loved it. I think you got to know a lot of folks in that town. I think there's incredible growth, just the amount of real estate that was being built. Even every time I go back, like there's incredible growth. And a lot of that's like people coming from Mexico across the border. And like, they, even in 2008, it didn't even feel like there was a recession because McAllen still had so much growth, which was an anomaly to the rest of the country. So I'd say that aspect. And growing up there was great just because it felt like a much more smaller town. New York City is incredible in your 20s and 30s. I don't think I'd want to have a family here though, just because like, just so crazy. I'm like, I don't want my kids to see some of the things I see like on the street or on the subway. But like, there's just so much going on. There's a lot of really smart people here. It feels like everyone has a mission with what they're doing and everyone's incredibly driven. And then that inherently also makes you more driven. Whenever I go back to McAllen, I'm like, why am I working so hard? I could just be relaxing.
The same thing. Like I lived in a small town in Alabama, Alexander City, and same thing. All like nicest people I've ever met in my life. But as an entrepreneur, like I could not stand it. They're just, you ask if someone is going to do that, they're like, oh, I'll get to it. To me, it's like I gotta go, and so it's hard because you kind of become like your environment. I don't think I could ever move to New York. I think that'd be way too much. But at least, it's hard to be in those areas when you're someone with some get up and go because you want to be doing things. And in a way, it's kind of nice because nobody else is. A lot of the properties I've bought, I've always thought like, how did nobody else approach these people? How did nobody else like see this sitting here and decide to go try to buy it and do something about it? I don't know. But I think a lot of it comes down to culture, which is why I love the Southeast. Like everything I'll ever buy will be in the Southeast because people down there are super nice people. They're easy to work with and they'll sell you something where like I've had sellers literally just tell me if I was young, I would do this and this and this to the property, like listing exactly what I'm planning to do to the property. And I'm like, yeah, it's a great, any other ideas? Like what else can I do to it? And it's just totally like the opposite of where I grew up. So I grew up in Northern Virginia, which is like, I think the worst place on the planet because it's expensive, but there's nothing cool there at all. It's all just a bunch of like bureaucrats in DC who have like used to have overpaid government jobs, not anymore. Now they're all moving. They might end up somewhere else, but yeah, it's I think that's awesome. So it's such a stark difference in the two areas. So that's where you invested though, right? In McAllen, that's where you bought the 2 houses? Yeah,
and we actually so we only held those 2 properties for, I think, a little bit over a year each. And then we sold them just because, well, A, like it was a distraction for our business because we completely pivoted out of it. And B, like we got pretty lucky with where we bought. Like I think the prices appreciated about 10%. So even with all the fees, like I think everyone made anywhere from like 5 to 12%, depending on which of the 2 they got into, which for like a year-long hold for like, pretty good for like a real estate related investment. So that's only an appreciation. That's not even like, if you include the yield, it gets a little bit higher.
Were they flips or were they just single family houses basically?
One of them was a like value add. So we did have to put a good amount of time and effort fixing it up. And the other one was already like a nice, you know, single family home that we didn't have to do much to.
So I know from like being the person running the software company side, crowdfunding sounds like it might have been like a lot more headache than, you know, a syndication would be. In terms of back end, like being the operator and using crowdfunding, what was that like? Was it like, man, we have 40 investors, we have 40 people calling us, asking us questions, or was it like, hey, these people put in so little, they're pretty uninvolved, they don't ask a whole lot of questions?
Yeah, I feel like it was still very similar to what typical syndicators feel, where some of the bigger checks, which was like 20K, 50K, like never asked us anything. And then the folks that put in like 100 or $500 were like, hey, like I didn't get my dividends this month. I'm like, sorry, we're like 1 day late. Or like, you know, something comes up and it leads to like 1 or 2 days late where you're distributing funds out. So I'd say for the most part, those like people were relatively quiet. It was only like randomly when we were like very good operationally. I think there's very few times we were late on dividends. So because we were always like on time, we never really had questions. But it was like the 1 or 2 times that we were slightly like a day or two late where people would follow up, and it was always the small checks that would.
Yeah, I think it just kind of comes down to the fact that, you know, people with the smaller check, it's more to them. When people are investing those larger amounts, it's kind of counterintuitive, but it's less to them because they have so much that they're able to do that. But do you think we'll see crowdfunding become more popular, or do you think it will just, like, hey, even if somebody figures out all the logistics and the software, just the reality of having that many people in a deal is just too much for the operators to want to do it. It's worth their headache to go and raise money, what I'll call the traditional route, like a handful of investors per deal.
Yeah, that's a great question. I'd say every crowdfunding platform I've seen up until this point has really struggled with just continuously getting users. It makes a lot more sense when interest rates are low because everyone's flush with cash and they're like, where do I put this? And so everyone's really looking for opportunities. And then as a sponsor, like, you know, a lot of folks make money on the acquisition fee, especially if so they're always looking to do more and more deals. Like, and then, you know, you get a lot of back end carry if things go well. And so, yeah, you're trying to do more deals. And so in a period where interest rates are low, I'd say crowdfunding is probably a lot more exciting for folks. I'd say like in this environment, I don't think it works very well because of that. On top of all the fees you also need to pay to like even structure a deal to allow for all these different investors come up. And then of course, like the best opportunities probably will never be on a crowdfunding platform because it's usually things that like other funds or folks couldn't fund themselves. And this is at scale. So like not for like the first 5 or 10 properties a crowdfunding platform showcase. Those will actually probably be good because everyone wants to like make sure everyone who's an early investor like gets a good return and then is like a good advocate for the platform. But as you scale, you just need more volume. And then the sponsors you end up attracting are those that like couldn't raise through private capital. So they're going to public. So yeah. And then there's this one company I think called CrowdStreet, or maybe it was Cadre. I don't know which one, so I don't want to like tarnish anyone's name. But there was one crowdfunding platform in which one sponsor defrauded investors, and that killed the platform like almost overnight from a trust perspective. And I think that they had raised a round at like over $1 billion valuation. They ended up getting acquired for under 200 within like a 2-month period of time. So it like almost overnight, like killed their business after like all these years of like building it up. All it took was one bad actor. So that also makes me incredibly scared of crowdfunding marketplaces in general. It just takes one bad actor.
Yeah, and it seems like it's more removed. Like in a crowdfunding, it's more so just like money than with a handful of investors. Like, you know them, you've had dinner with them. It seems like a different thing, which could have its pros, it could have its cons. It's interesting to hear you say that it sounds like more susceptible to the market, which, you know, kind of makes sense to me because you're more so just taking out a general slice of what I would call like your typical Americans. Whereas when you get into those like high checks, like 50,000 plus, those people are probably not susceptible to the same market conditions. They have their own business. Maybe it's doing better or worse, but they have plenty of money, whether, you know, the stocks are going up or going down. And so that's an interesting thing I think a lot of people need to consider because crowdfunding often gets pushed as like, you know, just this like easy thing. Oh, you just raise it from us. But again, when it's easy to raise money it sounds like, in my opinion, when it's easy to raise money and find deals, that's the worst time to buy. You want to be doing the opposite. And so it's probably not a long-term solution if you want to be buying deals when everything's going down and prices are going down. That's kind of when what I'll call an average American is pulling back, whereas those larger check writers, they've seen this story 100 times and they know, okay, everything's on a discount, let's go.
Yep, exactly right.
Wow. Have you found that, like for me on mobile home parks, there's so many tax advantages, and typically the only people who can really, really, truly take advantage of them are real estate professionals, right? They can't really, if they have a W-2 at some job, it can happen, but it's a lot less possible. Have you noticed I guess you guys just did single families, which might not have had great depreciation, but did you notice like any kind of questions like that, or were the questions from a crowdfunding platform different? Were they more so just like, hey, what's the projected IRR? What's the cash flow? That kind of stuff.
Yeah, it was all tied to like cash flow. People cared a lot about getting rental income, way more than appreciation. And I think like people evangelize like real estate. And so when you think of real estate, like you think of like, oh, I'm going to get my rental income every month. And so like, even for example, if that gives you a worse return, like I'd rather take a higher yield on rental income, but like the property is really not going to appreciate. Like folks would want that because they want the cash. And people also like to own pretty things. So like we experimented a lot with the type of properties people wanted to showcase or wanted to invest in. You'd showcase like, a home that needed to be fixed up. It's going to provide you a much better yield, or like a really pretty home, but it's not great yield. People were like, no, I want to invest in a pretty home, even though I'm never going to live there. Like I just conceptually want to be an owner of that.
Yeah, I have the same frustration all the time. I meet so many people in Denver who just want to buy something in Denver. And it's like, not only is it not appreciate, but it does appreciate. I'm sorry, it does appreciate, but they like lose money when they own these things. Like they're paying more a month than they could possibly collect in rent, not even factoring in expenses. And for me, I'm in the mobile home park space. I mean, shoot, my conversations with them go nowhere. They're like, I want nothing to do with that. It's like, well, are you investing or are you trying to live there, right? Those are two different criteria. And I've noticed that a lot of like beginning real estate investors think too much like a home buyer than a real estate investor. And it sounds like that's kind of exactly what you experienced.
100%. I mean, even my parents, like they own probably like 50 plus doors, and they still come in with the mentality of like, I want every apartment I invest in, if like I could feel comfortable living here. And so they'll probably put in too much money into fixing it up than they probably should from like an optimal ROI perspective.
Yeah, it depends on what you're in, right? If you're in luxury, if you're in like, I know somebody does boutique hotels, and that makes sense, right? If she's probably her target audience. I think a lot of people have to realize like what might make sense for them from an investment perspective. They are not the target person. Like, I am not trying to attract myself when I'm trying to rent these mobile homes out. Like it's a different. I'm attracting like a worker class. They want to live 20 minutes from where they work. They want safe, affordable. That's different. So people have to understand. They have to be able to separate what I call their business brain from their personal brain.
Oh, absolutely. That is a really good call out.
So you're in a pretty awesome position because you get to see a lot of capital raisers and you get to see what is working and what is not. Have you noticed any commonalities where you say like, hey, everybody who's doing this seems to be raising money just fine?
Yeah. I'd say there's a few themes that I've seen from very successful sponsors. And I'd say the first one is if you can vertically integrate both the operations as well as like the management side, like you're in a much better place than those that can't. And what I mean by that is, bring property management in-house, put someone at those units that are going to be managing. Of course, much easier to do for larger multifamily complexes and probably like a mobile home park, for example, that's like 20 spots or 50 or something. But I'd say like when someone gets to a certain scale where they can do that, they are able to bring their costs down dramatically by multiple basis points, and then pass off those savings to their investors. And so then that makes their future fundraisers that much easier because now all of a sudden you can project out a higher IRR and it's believable versus like someone else saying like, who's projecting everything into compressed cap rates at the end, and it's like, oh yeah, like that is way less believable to me that you're actually going to hit these numbers you're saying you're going to hit. So I'd say like that's the first one. I'd say the second one that I've noticed is people get really good at their niches. And I'd say you're actually really good about this, Jeff. Like, you know exactly what you're looking for, and you're very good at explaining that to, potential investors. I'd say if you focus on like one asset class and you do that really, really well, and not just like multifamily broadly. It's like I do multifamily class C and specifically like downtown markets. And like I can tell you like what their square footage is. I can tell you like what comps look like, and tell you like, here are all the contractors I reach out to. Then all of a sudden you're like, this guy like knows what he's talking about, and like knows that the numbers that he's giving you are like very accurate. So like that also just inspires confidence with, potential investors, and then it makes their rounds that much easier to close for their deals. And then I think the last piece is those that, like, if you have an existing track record, and this is, what's unfair for people starting off, but like, it's also the same thing for my business, where like, if I go to venture capital investors, people that have started companies and sold them are much better positioned to fundraise than me that has never sold something. If you have a track record where you're like, look, I've like done these deals, here's how they're doing well, like here's how they're being operated, then I feel that much more comfortable as an LP to invest with you, because like I know you've done this, you can show it to me, and your next one's probably going to do somewhat similarly. So I'd say like those are probably the three big things that I've seen time and time again successful operators that are able to continuously raise do versus those that cannot.
Yeah, that's awesome. That's really good stuff. One thing because my wife and I are an LP in a few things, and what we've always looked for is somebody who's messed up. Like, I've noticed a lot more people who I think are headed towards implosion who have never had a bad deal yet. And they just start to think that they can't make mistakes. Whereas, like, I've met some people who, you would think the opposite. You would think, oh, they made a massive mistake. I don't want to trust them. But guess what they're never, ever going to do again is probably that thing, right? So that's kind of what I like to see. Because in real estate, it's nice. You can leverage yourself. But if you get sloppy, which it's very easy to do when you start raising money, because you're not limited by your personal money, which is most people's kind of thing that's keeping them in line, it can get dangerous fast if you start growing too quickly. That's kind of what I've noticed as well too. But it's awesome to hear what you're saying. It's kind of the same thing I hear from a lot of people, right? A track record, which is tough when you're starting out. Like, you can't fake a track record. So, what can you do about that? You just have to leverage somebody else. Is usually kind of the best answer. Find somebody else who's done it, bring them an opportunity, take a smaller piece, and then the next time you find one, you have experience. So, for most people, I feel like their first 5 deals, it's less about what you made. It's more about like what you learned, because that will help you. I wish I would have known that earlier, because I wouldn't have been so frustrated when I kept having issues. I would have been like, oh, this is good, I'm learning. Instead, I was just like, damn it, I don't have time to work on my job.
No. I honestly love the call out that you made in the beginning about asking where they've messed up. I always ask people that on the podcast that I run, because I think that's what resonates most with investors. People like to know like where you've made mistakes, that you're even open to sharing that with them. Because people that say like, oh, I've never done anything, or if it's like a really lame mistake that you're like, okay, that is not like really a mistake. Like, I actually want to hear things that went incorrectly and then how you address them. Like, that builds a lot of confidence with people.
Yeah, and also like a big good example in the mobile home park space. Like, a lot of people say, oh, I don't want to do park loan homes, where they own the home and rent a lot. I like asking people why, and a lot of people are like, oh, I just heard bad things. It's like, that's not. That person doesn't appreciate tenant-owned homes enough. To me, I've had those parks where I own all the houses, and they have gone haywire and been an absolute headache. And so I so appreciate a park that is the opposite, and everybody owns their own house. And so like, it makes me appreciate what I do know even better. Because what happens in times like this where deals get tough, people start wavering from what they know, and they start saying, oh, well, I said I wouldn't do that, but maybe I will. And that's a slippery slope. That's very quickly in a situation where you're just making bad decisions and doing bad deals. Yeah. Awesome, Domingo. This has been great. I love getting to hear what you guys are doing. Hopefully we'll do this next year and you guys will have $1 trillion in assets on your platform. If anybody hasn't booked a call with you before or kind of seen what Homebase does, I highly recommend it. Like I said, I use it. It's awesome. I had used some others before, and it's nice to be able to know the guy who's running it. And I'm sure you guys are probably getting to the point where you don't want to be the person answering the call for every technical issue, but I know it's at least you guys have a good enough understanding of it, I'm sure you'll have good systems to help people as it grows. So if people want to get in touch with you and learn more about Homebase or learn what you're working on, what's the best way for them to do that?
Yeah, so you can always reach out to me directly on LinkedIn or reach out to me via email at domingo@homebasecre.com or just go directly on our website, homebasecre.com. You can learn more about what we're building and you can chat with me directly. We're always open and happy to jam.
Well, Domingo, I appreciate it. Have a good one, man.
Of course. Thanks so much for having me on, Jeff. This is so much fun.